To get more on this now, I'm joined by Nick Nelson, senior strategist from UBS. Well, the Swiss bank released its outlook for 2010, which Elliot just touched upon there. Thank you so much, Nick, for coming in the studio this morning. It does look like, well, the rally is set to continue, quite surprisingly so, because people say, well, there's liquidity out there, which of course is driving this up. But then I've heard, of course, the markets would take any excuse to actually do a little bit of selling.
Right. I mean, I think in the near term we've seen that, and we saw that the other week with the events in Dubai. But I would argue the fundamentals are generally improving. It's not just about liquidity. So we've had a turn in the economic cycle, improvement in GDP, and we've had a turn in the profit cycle. Companies are actually making profits, revenues are coming back, and they've done a huge amount of cost cutting.
Now, Nick, this is across the board. If I'm an investor today, where do I place my money?
Well, look, I think that next year will be a different mix within the market. So this year it's all been about cyclical stocks, banks, high beta stocks. I think next year there'll be a bit of a rotation into some of the laggards. For example, we upgraded the pharma sector from neutral to overweight this week. We think that's been left behind. It's very cheap relative to history. It's generating some reasonable cash flows and is perhaps something to rotate into.
But you say in your report, of course, that as we head into 2010, we take some risk off of the table.
Yes, exactly, because I think what's rallied has been small caps, highly geared companies, low quality and value. And I think we're going to move into something that's looking more like large cap companies, a bit more defensive with some growth characteristics rather than value. So just within the portfolio, still constructive on equities, but a bit of a rotation. And
Nick, would you make a difference on which countries in Europe you focus on? Is this the same across the board and focus on sectors, or do you say, well, actually, France does seem to have better valuations than Spain because at the moment, well, it's a little bit of question marks about the economy? I
think in general we'd prefer to look at sectors, because if you look at, say, Spain and you're concerned about the economy in Spain, you could go short the IBEX. Unfortunately, it's been one of the best performing major European markets this year because basically it's Latin America because of the exposure of the big cap stocks. So I think if you're in the small caps and the mid caps, they're obviously more domestic. But if you're talking about the CAC 40 or the IBEX or the FTSE 100, I think it's more about sectors.
Now, talk to me about pharma, because you upgraded pharmaceuticals to overweight from neutral.
Exactly. So I think what's happened here is this has been one of the worst performing sectors since the beginning of the year. Investors have not wanted to own pharma stocks. They haven't given you this exposure into this big pickup in the economy. But going forward, we're just starting to see some of the lead indicators roll over, which is what you'd expect at this stage in the cycle. And as they roll over, you would want to move away from, say, capital goods, general retailers, autos, into something like pharma. So I think it fits the bill of where we're moving to next.
And you've added Novartis to your European key calls, but also read Elsevier.
Yeah, exactly. So there's some ideas about slight defensiveness, quality of earnings streams, valuation relative to history. That's why we've got both of those stocks in there.
All right, Nick, thank you so much. Nick Nelson there from UBS with some of the stocks you should be buying.